If you receive Social Security retirement benefits, disability benefits, or SSI, there is a banking rule already in force that still has millions of recipients completely unaware that it affects them, and that matters more than most people realize. This is not speculation, not gossip, and not some proposal waiting on approval. It is active right now within the system. And if your benefits are being sent to the wrong kind of account, or your bank setup no longer matches what the system expects, your deposit can be delayed, flagged, returned, or made harder to access than you planned for. That is the core issue, and it is serious because the disruption does not begin when you hear about the rule. It begins when the money fails to move the way you expected it to. Here's the twist. For a long time, receiving Social Security felt routine. The money arrived on a schedule, people built budgets around it, and the process seemed dependable enough that few had any reason to question what was happening in the background. Most recipients simply watched for the deposit, paid the bills that depended on it, and moved on. That sense of predictability has not vanished, but the rules operating underneath it have changed, and most recipients have not been clearly told how much stricter the system has become. The Social Security Administration, working alongside the U.S. Department of the Treasury, has been tightening the standards for how federal benefit payments are sent, verified, and protected. That includes electronic payment requirements, account verification procedures, and wider enforcement around which types of accounts actually qualify to receive direct federal deposits. What most people miss is that the biggest change is not just the policy itself, but the way it is now enforced. In earlier periods, if there was a problem with a payment setup, the system often allowed more time to fix it. Banks could correct issues, notices could go out, and recipients usually had some room before a mistake turned into a disruption. There was more breathing room, more time to respond, and more opportunity for a mismatch to be corrected before it interfered with day-to-day life. That flexibility is shrinking. The process is now more automated, more exact, and far less tolerant of account setups that do not meet current standards. And when something fails to line up, the response is often not a warning call or a helpful explanation. It can be a hold, a delay, or a returned payment. And that can happen before the person receiving benefits even understands that anything is wrong. For someone depending on Social Security as a primary source of income, that is not a small inconvenience. It can become a full financial emergency almost immediately. Rent still comes due. Prescriptions still need to be picked up. Utility bills do not pause just because a payment system flags an account. That is why this matters so much. A technical problem inside a banking setup can quickly become a real-world crisis for the person waiting on that money. Now watch this, because this is where confusion starts to build. The federal government requires Social Security payments to be delivered electronically. That rule has existed for years, but the difference now is how aggressively the account requirements behind that rule are being interpreted and applied. Under current Treasury standards, benefits must go into an account that meets specific federal criteria. In general, that means a standard checking account or savings account at an FDIC-insured bank or credit union, or an eligible prepaid debit card account enrolled through the Direct Express program. In plain terms, not every account qualifies automatically. Some online-only accounts, some fintech payment platforms, and some accounts that have not been properly verified may not be fully eligible to receive direct federal deposits under the current framework. And that is exactly where people are getting caught off guard. An account may have worked before. It may still function for everyday transfers, purchases, or other transactions. It may look normal from the customer side and still fall short from the federal payment side. But the federal payment system is now checking accounts more carefully than it used to. And when it detects a mismatch, it does not sit back and wait. The deposit can be delayed or sent back, so an account that once seemed perfectly fine can suddenly become a weak point. not because the recipient did something wrong on purpose, but because the compliance standards in the background are being applied more narrowly and more strictly than before. That is why anyone receiving Social Security who recently switched banks, moved to a newer app-based financial account, or has not reviewed their banking information with the SSA in the last year or two needs to verify that the setup still qualifies. The safest move is not to assume. It is to confirm. It is to check directly, because the old habit of trusting that a working account will simply keep working may no longer be enough under the current system. There is another major piece here that affects a huge number of recipients and is rarely explained with the clarity it deserves: garnishment protection. Federal law gives strong protection to Social Security benefits after they are deposited into your bank account. Under Treasury rules, when a bank receives a garnishment order, it is required to review the account first and automatically protect 2 months of directly deposited federal benefits from being taken by most creditors. That protection is supposed to happen without the account holder asking for it, and without the account holder even knowing it exists. But here's the reality. The word automatic sounds reassuring, yet in practice, it does not always play out the way people assume. The protection applies specifically to money that arrives as a direct deposit from a federal benefits program. If your Social Security deposit is being handled correctly, that money carries legal protection that most creditors cannot override. But if there is a problem with the setup, the wrong account type, missing verification, or a bank that is not correctly applying the required protocol, that protection may not be there when you need it most. This is not some remote what-if scenario. Consumer advocates and financial attorneys have documented cases where recipients lost access to benefit funds that should have been protected simply because the banking arrangement was wrong or the bank failed to carry out the required automatic review properly. And that is a brutal surprise for someone who thought the law would protect the money no matter what. The law may provide the safeguard, but the actual delivery of that safeguard depends on the deposit being identified and processed the right way inside the banking system. So yes, the protection exists and it is important, but it only works the way it should when the account is correctly configured to receive those federal deposits in the first place. There is also a broader identity verification layer that is becoming more important across the financial system, and that shift creates a real pressure point for older Americans and for people who depend on benefit payments. Banks and financial institutions are facing stronger pressure from federal regulators to verify account holder identities more thoroughly than before. This is not limited to Social Security recipients, but the consequences can hit benefit recipients harder because they are often relying on a single payment to cover essentials. In some cases, banks now require updated verification documents before continuing to process federal deposits. That can mean a current government-issued ID, updated proof of address, or re-enrollment in direct deposit systems through the SSA's online portal. What most people miss is how quiet this kind of problem can be at first. A bank can place an account into a re-verification status, the payment can stop moving normally, and the person expecting the deposit may not understand what has happened until the money does not show up as expected. If a bank flags an account for identity re-verification and the account holder does not respond fast enough, deposits can be paused. The bank is not taking the money, and the Social Security Administration is not canceling the underlying benefit. But the payment can become trapped in a verification loop until the issue is resolved. For someone living on a fixed income and waiting on money for rent, groceries, utilities, or medication, that kind of loop has very real consequences. It does not matter that the issue is administrative when the effect is practical. If the money is delayed, the hardship is immediate. The good news is that the protective steps are not especially complicated, but they do require action. Go into your My Social Security account at ssa.gov and make sure your banking information is current and accurate. If you changed banks or financial institutions at any point within roughly the last 12 to 18 months, update that information directly through the SSA portal instead of assuming the bank will redirect the payment on its own. Banks are not automatically notified just because you want a federal deposit sent somewhere else. The SSA has to receive that change directly from you. That matters because people often believe that changing their account at the bank level takes care of everything everywhere, and that is simply not how federal benefit routing works. The payment instructions have to be updated where the benefit originates, and if you do not have an online SSA account, you can call the helpline or go to a local field office to verify your information in person. That single step by itself can prevent many of the deposit delays recipients are experiencing. Now, let's talk about the Direct Express card, because for recipients who do not use a traditional bank account, this part matters a lot. The Direct Express prepaid debit card has long served as the federal government's alternative option. It is a legitimate, federally managed choice, and for many people, especially those without bank accounts, it has worked well. But there have been updates within that program that recipients need to understand. The Direct Express card is issued through a contracted bank, and that contract has gone through transitions as well as re-enrollment requirements during recent periods. Anyone using Direct Express who has not received updated card materials or who may have missed re-enrollment notices should contact the program directly to make sure the account is still active and in good standing. Deposits going into an inactive or unverified Direct Express account can face the same holds and delays as deposits sent to any other account that does not meet compliance requirements. In other words, the payment may be issued correctly, but the receiving account becomes the problem. That distinction is important because many recipients assume a missed deposit means the benefit itself has been stopped, when in some cases the issue is not the benefit at all, but the destination account. There is another warning here that should not be ignored. The SSA has been strengthening its communication procedures around Direct Express because fraud targeting benefits recipients has been rising. So if you get a phone call, a text, or an email claiming your Direct Express card has been suspended and asking for personal information, do not engage with it. Do not provide details. Contact Direct Express only through the official number on the back of your card or by going through ssa.gov. Real changes inside the program are administrative and structural. They are not delivered through random outreach asking you to hand over your social security number, card number, or banking information. Any message doing that is not an official update. It is a scam. And that part cannot be overstated because fraud operations count on panic. They want the message to feel urgent enough that a recipient reacts before thinking, but legitimate agencies do not verify benefits by cold contact that demands sensitive information. Here's the broader picture, because understanding the reason behind all of this helps explain why the system feels so much less forgiving than before. Federal agencies have identified a large and growing fraud problem aimed at Social Security recipients. That includes unauthorized changes to banking details, identity theft that redirects deposits, and account takeover schemes. Much of the tightening around account eligibility and verification is a direct response to those threats. That does not make the disruption any less serious for recipients who get tangled in the process, but it does explain why the system is now checking more aggressively and allowing less room for error. When fraud protections are tightened at the federal level, they are applied across the system, not just to people with a history of problems. So even if you have received benefits in the same account for years without a single issue, your account can still be subjected to the same automated checks as any other account. And if it does not pass immediately, it can be flagged in the same way a suspicious account would be flagged. That is the part many people find frustrating, and understandably so. Someone with a long, clean history of receiving benefits into the same account should not feel like they suddenly have to prove themselves all over again. But the system is not making exceptions based on long track records. It is applying one verification standard to everyone, and accounts that do not clear that standard can be held. That means the logic of the system is no longer built around familiarity or history. It is built around whether the account clears the current criteria the moment it is checked. That is why waiting to see whether your deposit arrives is the wrong strategy. The smarter move is to verify your setup before a problem appears. Prevention matters more than reaction when the payment is essential, and the review process can delay access. So let's pull all of this together clearly. Social Security benefits are protected under federal law, and the stated goal of the government is to make sure recipients receive those payments reliably. But the system delivering those payments and protections has become more automated, more rigid, and less likely to catch or correct problems before they hit your account. The most important steps are straightforward. First, verify your banking information directly with the Social Security Administration through ssa.gov. Second, make sure the account receiving your money is either a standard FDIC-insured checking or savings account, or a verified Direct Express card account that meets federal deposit requirements. Third, if you have changed banks recently, notify the SSA yourself and do not assume your financial institution takes care of that for you. Fourth, understand that federal law protects your Social Security deposits from most forms of garnishment, but that protection depends on the payments arriving in the proper way through a correctly set up direct federal deposit arrangement. If the account is not receiving those funds as a proper direct federal payment, the same safeguards may not apply in the way you expect. And fifth, if anyone contacts you out of the blue claiming your benefits are in danger and asking for your information, treat that as fraud, not as an official notice. End the contact immediately and go straight to ssa.gov. Here's the final point, and it may be the most important one of all. These updates are not designed to make life harder for recipients, but they absolutely can make life harder if people do not realize the rules have changed. The information that protects you most is often the information that is explained least clearly until the damage is already done. That is why this issue deserves attention before a deposit goes missing, before access gets restricted, and before a preventable banking mismatch turns into a real emergency. One overlooked setting, one outdated account detail, one unverified banking profile, or one mistaken assumption that the old setup is still acceptable can be enough to trigger a delay that leaves someone scrambling for answers. And the hardest part is that the person affected may have done everything the same way for years and still get caught because the standards shifted in the background without a clear explanation reaching them in time. Share this information with anyone receiving Social Security retirement, disability, or SSI because one conversation can stop a serious problem before it starts. And staying informed remains one of the strongest forms of protection you have. Here's what that really means in practical terms. The people most at risk are often not the people doing anything reckless, but the people assuming the system still works with the same margin for error it once had. A deposit path that seemed perfectly ordinary can now be treated as non-compliant. A missing verification step can now interrupt access. A bank-level update that feels complete from the customer side can still leave the SSA without the correct routing instructions it needs. That is why the safest response is simple but decisive. Check the account type, check the verification status, check the banking details on file with the SSA, check whether a Direct Express account remains active, verified, and in good standing if that is the option being used. And above all, do not wait for a failed deposit to be the first signal that something needs attention. The system is moving faster, reacting more automatically, and offering less room for correction before the consequences show up. The people who protect themselves best are the ones who verify early, stay alert to scams, understand the garnishment protections tied to proper direct deposit, and treat account accuracy as essential rather than optional. That is the message. That is the warning. And that is why this banking rule deserves real attention before it turns into a costly surprise.